好的，那今天我们要讲的是希望大家都 real disclosure。那今天是开课，通常来讲都是星期六的时候开课。那今天要讲的是为什么会去找 kweb。那在这之前的话，跟大家讲解一下是有关于sorry, let's see. Oh, 1 sec. Hey, Grant, do you need me speaking English or is Chinese okay? I see someone joining that may require me to speak in English. Grant, you're there? Okay. It's fine. Either way. Let's try this one in English then. Okay. So why do we decide to use to look at kweb on the Thursday? So the reason why kweb was found is because there was the news about Splunk. SPLK got bought by Cisco, and Splunk had the news about Splunk went up significantly before the merger. And before that happened, there was a significant purchase of the call options prior to the Splunk went up. So the idea was to be able to find certain stock options activities that matching the similar pattern as Splunk. The pattern typically is someone buying a lot of volume, right? So if somebody is buying, there must be a lot of, is aware of something going on. There had to be a lot of volume happening on that particular one, and typically that also means that the price which they buy at tend to be significantly higher than the current stock price. So the strike is a lot higher than the current stock price. That's why there's a significant differences to be profit from. Now, again, why kweb? Okay. So with the Thursday, after I learned about Splunk, I had the idea to add the option scanner into my streaming. It's kind of like the what the people usually call it, the unusual whales. And it's not too hard to find because anything that can someone not to draw on the screen, please. Let me. That's okay.
It's only 4 people.
I'm going to stop people from annotating because that's really annoying. Right. So understand that we're looking for, first of all, the significant volume activities on the options. Second of all, looking for something that's on the strike that's significantly deviating from the current market price of the stock or not, right? So what that really means, the theoretical price of the option had to be pretty low. Theoretical price of the option had to be pretty low, right? Second of all, it's not too hard to look at the strike price versus the current price. So when I was looking at kweb, that particular was a Thursday on my recording, what I found is that the kweb had really big call option buying
bitch.
that went up significantly after the before the market closed. And so the strike which they were buying the option at was around 35. You can see that the option, the stock on the kweb before closing was around 26. So there's a deviation roughly about $10. Due to the volume was so massive at the time, well, not just, okay, so that gives me a suspicion that there's something going on, right? So we understand that, hey, you know what, there could be something going on, but I need some confirmation. I can't just go based on the volume. Okay, so this is where signal comes in, right? Now, from the signal perspective, what I can find on the kweb was that there was a significant purchase of the accumulation of the kweb before the event has happened, right? So let me try to. So what I can find is that there was some pretty significant accumulation of
the. Just cut your screen off right now.
Pretty significant accumulation of the kweb prior to this pop-up event, right? So this gives me the confidence that there may be this idea of this huge buying call volume is supported, right? It's not unsupported. I can also find that there was
shut the hell up.
On Thursday there was from a market signal perspective, it is telling me that it is hitting bottom. So it is at the oversold price. What that also means that buying here roughly about around 26.5 roughly around there.
Dreams.
So even if I buy there, the idea of that this might go lower than that price at the time is significantly less. So I can see that there was, based on the kind of a daily candle volume analysis, I can see that the volume is, there's buying volume, right? There's net buying volume. So from net buying volume perspective, I can see that this could go up significantly. This is roughly around the bottom price. So from a risk perspective, it's mitigated. I can buy at a low price. From call option activity standpoint, that there is a suspicion of something going on. Now, to expand the analysis from there, I also look at the SPLK, which was the major holding of the no, SPLK, sorry. What was it? The KLIP. I think KLIP. Now, KLIP is the major holding of the kweb. So, which means that there's a significant portion of the kweb that is actually just KLIP. Now, when looking at KLIP, I can see that there is a significant buying volume accumulating roughly around the bottom, around 17.5, right? Looking at the KV volume. So it's very obvious for me to know, hey, there's something going on. And we are also at the oversold situation, right? I can see there's a lot of suspicious buying activities going on roughly near the bottom. So from that perspective, the risk of buying at that price level become drastically diminished, right? So the risk is low, right? The chance of this going up high is significant. So I was able to purchase the kweb at this time. Now, to expand upon that, right? So kweb is also related to FXI in and the CWeb, right? Now, had I tried to buy in instead of kweb at the time, my return would triple at 12% instead of like 4 points. Well, not triple, but 2.5x. My return was like 4.7% return. But if you look at in, you see a similar pattern of significant buying accumulation, near the bottom. So again, all this spelled basically toward the same pattern. And from that standpoint, it was easy to make a buy at the bottom. And even though not, if you don't have 100% certainty that it goes up based on signal, the risk of going down further was drastically less. Also because from the analysis standpoint, we know that the market was about to rebound anyway. So that was the overall goal. Now, from signal perspective, okay, so that was the explanation of the kweb, how it came from, and I'm going to stop merging that option list, see if I can merge it into streaming instead, because that could be helpful. Or I have to figure out a way of communicating the possible event. However, all this requires just use of the signal to help with confirmation, and often we need it. For my personal analysis, I tend to want to use multiple tickers to help me reconfirm the event to make sure I mitigate the risk, minimize the risk, right? Because I use market volume to help me determine when someone is buying. Okay, now from the market signal perspective, this is probably a good opportunity for me to let's see, let me use ES instead. So as the initial 13 minutes I spent talk about the whole kweb and the unusual option activities. The rest of time, I'm going to just talk a little bit about the signals. A lot of people look at a lot of things in the market. They're not fully aware of what's going on. When to buy and when to sell, right? So everything's in the traditional teaching of the technical analysis tend to circulate around something called moving average, right? But we all know the problem with the moving average is that it tends not to be responsive enough. There's only so much that you can stretch with the moving average. However, as we know that, any signals, the purpose of my signal is trying to provide a clear picture of what's going on in the market, right? So with any type of potential reversals on a downtrend, that had to mean that there is a buying volume involved, right? Somebody had to buy in order for the pattern to reverse on a downtrend. Somebody had to sell in order for the pattern to reverse into a downtrend from an uptrend, right? That sounds obvious, right? But how do you determine that? How do you build up the awareness that, hey, you know what, something is going on in the market for you to be, hey, you know what, I need to do something here instead of ladder, right? So to make the signal simple, currently what I'm trying to focus on is, and let me just try to take out some of the things that's not entirely necessary. Let me see, give you some ideas on this one. the style boxes. Let me see. 5%. How's that? Yeah, better. Change it 10%. Okay. Okay. So currently, what I'm trying to do is because a lot of people doesn't want to think a lot, right? Typically, in any type of signal, what we try to pinpoint to is when to buy and when to sell, right? Obviously. Now, what that really means is that we needed to have some certainties to know, hey, A, is it about this right price, right? Do we know if the price is right? Number two is if the price is right, do we see buying activity? So, for example, if something is going up in an uptrend, right, for sure, right, there had to be some kind of buying activity involved. You can't possibly say, hey, you know what, I'm just going to buy here regardless, right? Somewhere along the line, the market has to agree that, hey, you know what, this is time to buy. Now, from a signal perspective, yes, we can use candle analysis to calculate very fine level time frame to determine when the buy volume started. However, right, the market activity itself has too much noise, so we needed to have better assurance to understand when the buy activity should be started. This is where the KV comes in, right? This is where other signal comes in to help filtering out the noise. Well, first of all, we have to know that there is buy volume involved. So that's the first thing. Well, but as we can see from the chart, as we can see from the chart, that there can be multiple opportunities where the buy volume exists. For example, we can see here, and we can see here, right? Those are where the buy volume exists. So why don't we buy here instead of buying over here? Well, a couple of things. Number one, we are below the oversold curve, so which means the price relatively is low at this point. Price is relatively low at this point, right? Why does buy volume comes in? Buy volume comes in because the anticipation of the market is that, hey, this price is low enough for me to accept the risk of buying here at this time, right? That is the nature of the buy volume. So to elaborate from there, if the buy volume, if the price is not low enough, would it make sense for people to emerge and start buying? No, right? Because the price is not low enough. Okay. So obviously, what is the price relatively right now is important. Having the price at oversold region is not the only reason why we should start looking at buying, but it definitely, encourage us to be able to observe if there's something that we should be mindful of. So that's why, I have an oversold signal here that tell me, hey, you know what, it's time to look at buying. I also have a stop loss signal here. Why there? Well, primarily that we can also see that there is exit volume over here. That I try to exit the trade, right? We can see there's some activity that tell me that there is negative volume, right? When people go from here, they start selling, right? There's another pump over here, right? Finally, we die off. We die off. The whole buy volume starts to die off from here. So I understand that there's many things on this chart, and I'm not trying to explain everything, right? Ultimately, the pattern of the market is consistent. The market always try to buy at the low price, right? Typically an oversold situation. Because markets see, not just market, right? There's a lot of fund that's trying to buy at that time. So because market can build consensus when the price is low enough, therefore we can see that the buy volume exceeds the sell volume, and the net volume of the market is, is a buy, right? That's why something can go higher. And similarly, right, when looking at downtrend, let's go back up here. I think it's around here. Yeah. Similarly, that we can see that there is, a reversal of the trend over here. Well, not only for the fact that we have the assurance that there is significant volume start to exiting here, and here, right? From the perspective when we do the analysis, we see that, hey, there is something that start to inverting the trend from an uptrend, right? We can see that the KV exit here, but it didn't create a much lingering market impact. Market still buying. Again, more selling here. It didn't impact the market much. But when it arrived here, we see that partially perhaps it's the timing of the thing, right? There's just not enough buy volume to sustain the activity anymore. And when there is more significant selling happening, this become more like a snowball effect. The market determined, hey, you know what, this is a significant sell volume at a relatively higher price, then everything just running off from there. To give a better perspective what that really means for our chart, this price here is here, right? So this signal you see here corresponding to this price level here. So these two are equivalent. And so with this type of analysis automation, it helps you to not have to worry as much with understanding every single details on the signal. However, understanding the signal does help you tremendously, which I'm not going to go through today because that's just too much work for me to go through today. Right? I'm trying to keep it within 30-minute discussion. Right? I'm going to leave the last 5 minutes and so to talk about my expectation of the market happening next. Obviously, right now the market, sentiment is very low. We try to have an oversold bounce that failed, create stop loss, went down lower, right? So we continue to achieve a lower low. However, we are getting close to a reversal point. So this reversal point, due to the fact that we can see volume profile start to die off over here. So if there is buy volume that coming in, very likely we're going to see a bounce Now, that being said, the bounce is not going to be huge, and it's likely going to touch the moving average line roughly around 4415. That's the estimate right now, 4415. I put it 4410 just so I don't get caught in the last second. Expectation is for it to bounce, come here, right? Then this should be the last kind of a dip. Then we have a more significant rebound. On the second rebound, we should touch a higher moving average. Then if it were to go lower, I think we should stop roughly around 4250, roughly around there. So from there, then that should be the bottom roughly about October, mid-October. Then from there, we should see a rebound from there. Again, the entire market activity depend on both the market sentiment and what the big money is trying to do. So at this time, that is kind of the estimate on how things would go in the next few weeks. I think this dip should arrive roughly before 10:15. But overall, that is the expected pattern. So it will be a good, interesting opportunity to have a few opportunities to go long. Yeah. All right. That's all for today. Thank you. Please remember to click on follow and appreciate your time. Okay, I'll stop the streaming now.